Hey everybody, Jake here with Trendspider to go over the weekend update going into the new month of May, and the markets look absolutely horrible. There's not really a better way to put it other than just it is really brutal out there. And we'll start with the broad markets and go into crypto and then into some individual names. Starting with the S&P 500, on SPY, we really just have a very basic level that we need to hold. So if you look at the chart here, we essentially need to hold exactly kind of where we hit a low of the day on Friday, which is today, which is when I do the video. But you've got this area right around 410, which is the February 24th low that we really need to hold above. And if we don't, that's when things definitely start getting pretty interesting to the downside. And on the weekly chart, you'll see here that we have this COVID low VWAP shown by this blue line, and you can see that we have a lot of room to move down until we get to that area right around, let's say 382, 383. And the really interesting thing is the Qs have already made it there. So if we go into the Qs, we actually are below the COVID low VWAP now. So the fact that we have already got to this area on the Qs and broke down through this descending triangle here. You can see here that I had these previous lows from February 24th and then from March 14th mapped out, and we actually closed below that area today on Friday. It does not look incredibly good going into May. And you have some people say sell in May, go away. Well, it's already been a sell in April and go away. So we'll see if that continues into May. But the fact that we are breaking down below this COVID low, something we haven't done pretty much since the COVID low occurred, or since pretty much since this COVID low VWAP has started. We touched it back here on the week of May 30th, but we've never penetrated it and broke down below it. So this is definitely new territory for the markets. And with the NASDAQ leading, it does not look incredibly good. And we usually don't look at XBI, but we will look at that one after IWM. And the thing with IWM is pretty much the same thing. We have this bear flag. We broke down below it. We hit a new low from Friday, Thursday's low on Friday. So we are breaking to new lows here. And with IWM and XBI both being definitely your risk on, risk off kind of indicators here for the equities markets, it just does not look incredibly good here. We had this VWAP pinch, the COVID low VWAP and the all-time high VWAP. We finally broke below that pinch, as you guys can see here by this orange circle that I just made. So we're really starting to get some momentum to the downside at this point after we did break some new lows that we saw back in February and March. So all in all, not looking incredibly good here. And then XBI is pretty much telling a similar story. You really have this longer term trend zone on the weekly chart. So let me just zoom out here a little more. You guys will see, I mean, we're literally breaking down through this diagonal support zone that's been support now pretty much starting back in 2009 area. So pretty much when we hit a low from the financial crisis lows, pretty much starting from there. So this is definitely some uncharted territory that we're in. We're starting to break some really crucial levels here, and things are starting to look pretty rough. On the daily chart, you could highlight maybe this area right here, give or take. And you'll see here that we're also breaking down on the daily as well. So not only are we breaking down on this longer term, like 10-year uptrend, but we're also breaking down on the daily. So all in all, we're getting a lot of confluence across different time frames that things are really starting to break down here. Now, if we look at the risk on, risk off, looking at Bitcoin and Ethereum, you can definitely get a general idea of what's going on in the markets just looking at these as well. You can see here that we're also having trouble after breaking down through this support that starts back in January. So we broke down, retested the previous support, now acting as resistance, and not the best daily candle here for Bitcoin. And if you look at Bitcoin on the weekly chart, you'll see here that we have a couple different things. We have the COVID low VWAP, and we have this zone highlighting about 10% above the COVID low VWAP. So your VWAP is here, and then you also have that offset, that 10% offset here that kind of captures a lot of this price action that occurred in July of 2021, as well as January and February of 2022. So this has definitely been an area where price has held. So if we do start to break down through the symmetrical triangle and through this COVID low VWAP zone, let's call it around 32.5, and we close below that on the weekly chart, then things are really going to start looking pretty ugly here. So Bitcoin, Ethereum's looking pretty similar, to be honest. I mean, generally they trade almost in tandem. Ethereum, sometimes you may get a little bit of a quicker move, but or just stronger move with Ethereum sometimes having a little bit of a higher beta. But same thing here, right? You're already breaking down through this support, same as we just highlighted on Bitcoin. And we did retest that support acting as resistance, and now we're just having a pretty ugly candle going into the weekend. So not the best setup here. If you look at the weekly chart, you'll see here that we also have a symmetrical triangle here, and we're getting close to potentially breaking down through it. Here's the COVID low VWAP that I just right-clicked on the COVID low candle, and you can see that VWAP is way down here around 1800 or so. So this would definitely be uncharted territory if we get down to around 1800, but you'll definitely see if you look at a lot of different charts, a lot of these charts are starting to move down towards their COVID low VWAPs or breaking down through them. So all in all, definitely something you want to keep in mind. Now, going into a few individual names, we have 4 to go over. We've got Tesla, we've got AMD, Delta, and NEO. Tesla, this one is not looking incredibly great. I mean, if you draw a basic support zone here, connecting these two areas, we're already breaking down. We tested the previous support zone acting as resistance on Friday, and we closed almost at the low of the day, or if not at the low of the day. So this a pretty typical kind of breakdown looking setup. So you've got, as I mentioned, you got the previous support, you broke down through it, you retested, and now you're starting to move down towards those lows that we saw on Thursday. There's still a lot of room to move down around 820, but still not a great candle with that body of Friday engulfing the entire body of Thursday. Now, on the weekly side of things, you could probably look at this chart a million different ways, but the way I'm going to look at it is simply just looking at this area right here, and kind of the same thing, right? You've got this previous support zone acting as resistance back a couple weeks ago, and then we're starting to potentially retest the lows that we saw in late February or second week of February. So all in all, second to last week in February, but all in all, definitely not an incredibly strong chart here. And with all the Elon news coming out with Twitter and all that, people may start getting a little spooked that maybe he's starting to change his focus a little bit here. And that's not going to help the bull case at all. So Tesla did nothing to help the S&P 500 this week at all. So going into AMD, another one that just got absolutely crushed. You got the same thing here, right? You've got this shorter term time frame, and we're actually holding this longer term support that starts in November of 2021. So this is where that candle starts for this support zone. So if we start to break down through that, that's when things are definitely going to get very bearish. But if you look at the COVID low and the VWAP from the COVID low, we are already breaking down 2 weeks in a row now through that area. So all in all, a very ugly chart, and it's kind of nuts that AMD has literally just dropped 5 weeks in a row now. So just not any type of market leader right here. If anything, leading the markets lower. We'll have to see if we get a little bit of relief going into the week ahead. But all in all, breaking down through the COVID low VWAP over the last 2 weeks. But on the daily, we are still holding this support zone that starts back from November. Going into the next one, we have Delta, and Delta Airlines is actually one that has done really well, as well as the other airlines as well. But this one has had quite the move to the upside, but you can see by this broadening formation that we did get rejected over the last 2 weeks, right at this resistance area. And then on the weekly chart, we're also at resistance. So these two setups look almost identical, but they're actually two completely different time frames, right? So you've got this broadening formation starting from 2021 in March, and then you've got this broadening formation starting in August of 2021. So two completely different broadening formations, but the same thing. We're at resistance, and you're really going to need a lot of buying pressure to break this, because this has been resistance now. It's almost horizontal resistance, right around 45, and you've had this literally 1, 2, 3, and this is the fifth time. So 1, 2, 3, 4 back in April or on April 21st, and then again April 29th we were rejected as well. So just looking absolutely, almost like we're ready to follow the rest of the markets down, even though this has had a very strong last month and a half or so. But with that weekly right at resistance, I think there's definitely some reason to think that this may be the next to add to the market weakness. Going into the last one, we've got NEO. So we looked at Tesla, looking at NEO. And in this one, you've got a very similar thing that we kind of just touched on Delta, where you've got essentially two charts, a long-term and a short-term, starting from two different areas, actually showing a very similar setup. So you got on the daily, you've got the symmetrical triangle. On the weekly, you have a symmetrical triangle. And we're right at this weekly symmetrical triangle potential support zone here. And we'll just have to see if that holds or if we actually start a bigger move to the downside. And then same thing on the daily here. We do have, this downtrend that we've been in pretty much since November. And, some would maybe look at this as a potential bear pennant for the next leg down going into May. So all in all, we really need to hold this support zone. If we don't, that's when things are definitely going to get very interesting. And with the way the markets look right now and the weakness that we're seeing, across the board, it's not like, just one particular sector is looking rough. It's been pretty much across the board, give or take a few stocks here and there, which is always the case. But for the most part, you have seen a lot of these things moving together. So that's why a lot of these charts are looking relatively similar. And we'll just have to see what happens into May. So thank you guys for listening to the weekend update. Hopefully this was helpful to get a new perspective or a different perspective from what you're seeing. And remember, if you want to try Trendspider, we have a 7-day free trial. You can sign up at trendspider.com on our pricing page. Give it a shot. If you don't like it, no worries. Just cancel your trial before the trial is over. And we appreciate you giving it a shot. And if you do like these videos, please like and subscribe. Everybody have a great weekend, and thank you for listening.